Maximize your deduction in 2025 Australian tax return. In this video, I'm going to show you the ultimate guide to legally pay less tax and help you save thousands of dollars every year. With tax time coming soon, these tips will help you maximize refund this year and plan better ahead for next year. I will divide the tips into two categories: the work essential deductions and advanced strategies. Let's get straight into it. Under work essential deductions, we have the following items, which I will explain each of them shortly. The first one is work-related car expenses. Second, work-related travel expenses. Third one, home office expenses. 4 is self-education study expenses. 5, laundry and dry cleaning expense. 6, accountant fees. 7, other work-related expense. So let's discuss the first one, car expenses. If you use your car for work, you may be able to claim things like fuel, repairs, insurance, and even lease payments. You can claim trips between job sites or your work to training course. However, you generally cannot claim trips between home and work because they are considered private in nature. The ATO offers two methods for calculating motor vehicles deductions. The first method is logbook method, which requires you to track your odometers and find out the total kilometers of your work-related driving for 12 continuous weeks. You can take the work travel divided by the total travel to arrive at the work percentage. So choose your 12 weeks properly to have the best work percentage. You can rely on this percentage for up to 5 years before you need a new logbook. You need to keep all the receipts related to your cars like registration, insurance, repairs, fuel costs, lease payments. This is to calculate your total car expenses. Take the total expense multiplied by work percentage is your car expense deduction. Second method is cents per kilometer method. For 2025 financial year, you can claim 88 cents per work kilometer you drive for up to 5,000 kilometers. That's a deduction of up to $4,400. You don't need receipts or logbook for this method, just be able to explain how you worked out the distance. It's a simple and generous option. So choose the method that works best for you. If you drive a lot for work, logbook method might give you the bigger deduction. But if your work travel is limited, the cents per kilometer method is generous and easy to use. Second deduction is work-related travel expenses. Besides car expenses, you can also claim other work-related travel like Uber, flights, public transport, meals, or accommodation during business trips. Just make sure you keep the receipts. You can claim travel when you travel between two places of work, travel from home to irregular work site, travel from home to a client site, travel between home and work carrying bulky equipment, travel between work and places of education. Number 3 is home office deductions. Next up, work from home deductions. 37% of Australians worked from home last year, and if you are one of them, you may be eligible for deductions. There are two methods you can use to calculate these deductions. Number 1 is fixed rate method. You can claim 67 cents per hour worked from home, covering expenses like internet, phone usage, electricity, gas, home office supplies. However, the fixed rate doesn't include the usage of technology and office furniture like chair, desk, computer, bookshelves. So if you incur these costs and they are less than $300, you can claim the amount in full in the tax return. Otherwise, you need to claim the depreciation over a period of time. Second method is the actual cost method. You need to calculate your actual expenses. Keep in mind that if you use an item for both work and personal use, you will need to apportion your deductions fairly. Number 4 is self-education and study expenses. If your course helps you to do your current job better, or could lead to a higher income or a promotion in your current role, then your tuition fees can be tax deductible. You may also be able to claim textbooks, journals, and stationery as part of your self-education expenses. But there's a catch. If your employer reimburses you for the course or related cost, you cannot claim those expenses. Good news for uni students. If you are already working in the same field as your studies, even part-time, and your cost directly relates to that work, your tuition fee can be deductible. However, you cannot claim if you are studying to switch careers or getting a new job. You are not earning income when you pay course fees. The cost isn't directly related to your current job. You are repaying HECS help even if it's for work-related study. And just to clarify, if you use free help or a private loan to pay your tuition fee, that doesn't stop you from claiming a deduction, as long as you meet other rules. For people who are thinking of MBA and claiming deductions, I just want to raise that the ATO have trust issues when it comes to MBA claim. To get that sweet deduction, you will need to prove it is directly related to your current job. That means the ATO wants to see your job description and the course outline. Only the subjects that actually relate to what you are currently doing might be deductible. Number 5 is clothes costs, laundry and dry cleaning expenses. You can claim the cost of clothes and laundry or dry cleaning expenses if your work clothes is occupation specific, like chef's uniform or judge robe. Second is protective fire resistant gear or sun protection clothes, steel cap shoes, or your clothes is a compulsory uniform. If it's not compulsory, then it has to be a registered uniform with the ATO. So if you work in a barber shop and the work clothes requirement is a black t-shirt, you will not be able to claim the cost because it is too generic. So how much you can claim? You can claim the price you pay for the clothes and washing, drying, ironing, and dry cleaning of eligible work clothes. Here's the ATO quick claim method. You can claim $1 per load if that load is only work clothes, or 50 cents per load if it is a wash mixed with personal clothes. If you are claiming $150 or less for laundry, you don't need the receipt. But if your total work-related deductions are $100 or more, you will need a record like a diary or a logbook to back up your laundry claim, even if the laundry part is still under $150. Number 6 is accountant fees. This is straightforward. If you pay a tax agent or accountant to prepare your tax return, you can claim that cost as a deduction. 7 is other work-related deductions. There are many other work-related deductions you can claim. For example, if you use a computer, tools, or equipment for work, you can claim the cost of these items. This can also include work-related magazines, books, grooming expenses. Check out the ATO deductions per occupation so you don't miss out on claims. That wraps up the work essential deductions. Now, let's level up and talk about advanced strategies. Perfect for those who like to plan ahead, make the most of their extra cash, and actively look for ways to get the best financial outcome. I will cover the following strategies. Number 1 is superannuation contribution. Number 2, spouse super contribution. Number 3, increased negative gearing. 4, salary sacrifice. 5, private health insurance. 6, alienate income. Before diving in, let's be responsible. Always speak to your accountants or financial advisor before putting any of these strategies in action. Now, let's explore in detail. Number 1, superannuation contributions. Contributing extra to your super can also help reduce your tax. The cash that you pay up to your concessional contribution caps is a tax deduction. Additionally, super contributions are taxed at just 15%, a much lower rate than your income tax rate. So, double win for you. If you haven't made any concessional contribution in the past 5 years, you may have an unused cap of up to 137.5 thousand. This means you can contribute up to 137.5 and claim a deduction. This will be a great strategy if you have a certain income, like selling your investment property or shares portfolio. Number 2 is spouse super contributions. Another way to save on tax is by making spouse super contributions. If your spouse income is less than 40,000, you could contribute up to 3,000 to the super and claim a tax offset of up to $550. These contributions don't count against your concessional contribution cap. That's a great strategy to top up your spouse super while saving tax at the same time. Number 3 is increased negative gearing. Another tax saving strategy is negative gearing. This happens when your investment property costs more to own than it earns in rent. The loss can be used to reduce your taxable income, which may increase your tax refund. Here's how it can work. If you own both your home and an investment property, you could shift money from your investment loan to pay down your home loan. This increases the loan on the investment property, which creates more interest on the investment property. More interest means a bigger tax deduction without increasing your total debt. You are just moving the debt from one property to another. Negative gearing can help you save a lot of tax, but the rules could change in the future. So make sure you stay up to date with any government announcements. Number 4 is salary sacrifice. Let's kick off with what salary sacrifice is. Salary sacrifice is an arrangement with your employer where you agree to have part of your before-tax salary paid towards something instead of receiving it in cash. This can reduce your taxable income and so reduce your tax. However, salary sacrifice can trigger fringe benefit tax to your employer at 47%, so it generally only works well with equity exempt benefits like super contributions, electric vehicles, and portable devices like laptops or smartphones. Let's break it down with an example. You earn $100,000 per year before tax and decide to salary sacrifice $20,000 into your superannuation. This means you only need to report $80,000 as your income on your tax return. Your employer is okay with this because their total cost is the same. This is a good opportunity to discuss with your employers. Remember to come with preparation. So research for a company that offers salary sacrifice benefits so it can make your negotiation much easier. Number 5 is private health insurance. Did you know that getting private health insurance can save you on taxes too? If your income exceeds $97,000 as a single person or $194,000 as a family, you are subject to an additional 1 to 1.5% Medicare levy surcharge. But signing up for a private health, you can avoid this surcharge completely. The medical levy surcharge, or MLS, is designed to encourage higher income earners to take out private health insurance cover, which help reduce pressure on the public health service system. The idea is that if you can afford private health insurance and choose not to get it, you should contribute more to support the public health system. Sometimes it's actually cheaper to pay for basic private health cover than to pay the surcharge. Shop around to find the best coverage for your needs. In essence, this is not a deduction but a strategy to reduce your tax. Number 6 is alienate income. Alienating income involves transferring income from one person to another to take advantage of lower tax rates. This can be done by shifting income to a family member in a lower tax bracket or placing income in a lower tax entity, such as company. For example, let's say you are an exceptional sales director at Canva, earning $800,000 per year. with an average tax rate of around 47%. The tax burden is significant. To reduce this, you set up a company between yourself and Canva, so Canva is now contract with your company instead of you directly. The company tax rate is 25%, which saves you 22% in tax. Alternatively, you could establish a family trust where the $800,000 is split between your stay-at-home spouse and adult children. This strategy works particularly well for individuals who can demonstrate that their job delivers a specific result. However, implementing an alienation strategy requires careful planning and consultation with your accountant is a must. And there are integrity rules such as personal service income rules, Section 100A and Part 4A, which pose challenges to income splitting. Thanks for watching. If you find this video helpful, please make sure to like and subscribe for more tips on Australian tax. Got a question or want to share your thoughts? Drop the comment below. I love to hear from you. Thank you for listening.